Hi, and welcome to this part of the course. So for this lesson, we're just going to very briefly talk about the market players. So that's who makes up the markets and how do they influence it in terms of shifting the price around. So who is involved in the markets? So let's get started. So we've got four main players in the markets. You got standard banks and financial institutions, so things like investment banks and that sort of institution. Then you've got large corporations. These are your companies like Exxon Mobil, BP, Shell for oil and gas industries. Then you've got things like Walmart and large corporations, international. They have to do trade. Um, the third one is governments and central banks, and then finally the speculators. So that's the small traders, and speculators includes people like ourselves. Now, let's start by going through a little bit more on banks. So they are some of the largest players in the market. Now, I'm going to talk mainly about Forex, but this does apply to commodities and cryptos to a certain amount as well. Um, so, yeah, so for the banks and financial institutions, they are some of the largest players in Forex transactions. A huge amount of these transaction deals take place between different banks, and that's known as the interbank market. There has been some controversy around this, but these transactions are generally on the behalf of customers, and although they can be for the banks themselves, large corporations get involved in the market because of the way they do business. So a British company will have to exchange pounds for euros if it purchases equipment from a company based in Europe. And also, companies will look to hedge their risk by buying or selling currencies. So that's allows them to lock in a certain exchange rate. So if you think about when you go on holiday, you might look at the exchange rate ahead of going on holiday and buy your currency in advance of when you actually travel. And that's what these companies are doing. They're trying to reduce their risk by buying in advance. So, for an example, a British company wants to import some steel from the US and it would have to pay in dollars. If the price of the pound falls against the dollar before the payment is actually made, the company would end up paying more than the original agreement. Therefore, the company would probably look to enter a contract that locks in that exchange rate and eliminates the risk of dealing in a foreign currency such as dollars. And for some more information on contracts and how they work in commodities, particularly, we do have a video available on our public YouTube site about contracts. So, third one is governments and central banks. So, for example, you've got the European Central Bank, the Bank of England, and the Federal Reserve in the USA. So, similarly to the large companies, governments use it as a forex market to do business. So, making international trade payments and handling reserves of foreign currencies, just as like a way of managing risk on a country basis. And finally, we talk about speculators. So, speculators are only in the market for one reason, to take advantage of price fluctuations and make money. Although it is fun as well, but at the end of the day, everyone's there to make a profit. And speculators can be hedge funds that have vast amounts of money to small scale traders trading small accounts and anything in between that. So um, really covers a broad range, but generally they won't have significant impact on the markets. You'll see mainly the banks and governments having the biggest effects on the markets when they make changes and investment decisions, um, whereas speculators won't really change that. One or two trades made by speculators won't have a huge impact on the market, generally speaking. So that's a quick overview of the different market players. You got banks, large corporations, governments and central banks, and speculators. And at the end of the day, people, humans, are still responsible for the buying and selling. So all of the information about emotions and the emotional price points and psychology is still very relevant for each of these market players. And so that's the conclusion of this section of the course. A short one, short and sweet. So hope you enjoy the next part. Cheers.